All right, market heroes, welcome back. We're going to talk about something that's really awesome. So, by this point, you guys know all the high level things, right? You know about, we only place trades that are 50-50 or better. You know how to reduce your cost basis. You know how to stay small. You know how to diversify your different types of trades, right? You know how to extend the trade if you're not making money off the beginning, if you're losing, right? You know all those things. You know all the strategies. If a stock is down and volatility is high, you know exactly what to do, right? You know all of those things, right? So now you're going out there, right? You're doing your shortcut trades. You're doing normal trades. You're selling strangles, straddles, iron condors. You're buying call debit spreads and calendar spreads. You're doing all these things. You're killing it. But now it's like, okay, I have all these different positions, and there's not like a rhyme or reason about the total portfolio. Each position by itself is non-correlated to one another, but I want to see what it looks like in terms of the total portfolio. That's where the term beta weighting comes into play. So beta weighting is taking a position. Let's say we're going to compare Facebook and SPY. What we're going to do is we're going to take the percentage price movements of each of those stocks over the last year, and then we're going to do a standard deviation calculation on them and actually get how many shares of SPY is equivalent to how many shares of Facebook, etc., etc. Right? So that's what it is. And what that does is it allows you, and what I do is I beta weight every single one of my positions to SPY, right? So if I always, at any given time, want to have short 500 deltas of SPY, I can make trades in Apple, Facebook, Amazon, Netflix, Google, GE, USO, GLD, and together with all of those, I can, without even trading one share or one contract of SPY, come up with the SPY delta that I want. Right? So that's what's so cool about it. If there aren't any opportunities in SPY for us to make money, but let's say there's opportunities in Amazon, Netflix, Apple, GM, Snapchat, I can still get to those negative 500 deltas if I want, making those trades in those other stocks. So that's where beta weighting comes into play. It also lets you know what your portfolio is going to do based off of, say, for example, SPY. So if I'm short 100 deltas of SPY via trades and positions in Apple, I know if that SPY goes down $1, I more than likely will profit about $100 on that day, right? So that's what beta weighting is, and it's a really great tool for you to understand how all your positions come together. So let's kind of take a look here and see what that looks like. So I'm in the Analyze tab in my Thinkorswim platform. Usually it starts at single position, but I'm going to put it on beta weighting right now. And let's say I want to have a totally neutral position, right? So close to like 0 deltas, right? So up or down 5 or 10 deltas in SPY is pretty close to neutral. All right, so let's say I want to get long, for example. I want to get long Facebook, right? So I'm going to go ahead and sell this 160 put with an 18 delta. So off the bat, I know that there's an 18% chance Facebook finishes this expiration cycle below 160, which means there's an 82% chance it doesn't, right? So I have a bullish directional bias on Facebook. I'm going to go ahead and sell this put in Facebook, right? This gives me long 18 shares or 18 deltas of Facebook. But now I'm going to go over to SPY, right? And I see in SPY, that's only about 9.66 long deltas. So where it was 16 deltas before, long deltas or 18 deltas before of Facebook, now beta weighted, it's only about long 9.66 or 10 shares or deltas of SPY. So if I want to go ahead and make a neutral position in SPY, what I could do is I could go ahead and I could sell the call, right? I could go ahead and I could sell the call that is closest to 9.66 deltas, or this example, let's call it, I don't know, yeah, let's call it the 254 call, right? The 254 call, maybe this one's better. 11.22, yeah. So that one's better, right? So the 253 call has 11.22 negative deltas, and then the 160 put in Facebook has long 9.66 deltas. So this is just like selling a strangle. This is just like selling a strangle, a neutral strangle in SPY. So if Facebook has high volatility and is on the low end of its range, actually, let's go ahead and take a look about that. Let's go ahead. That'll be a fun one, right? This is how beta works, right? So I want to go ahead and I want to look for something with high volatility on the low end of its range, right? And I remember that was Disney, right? So Disney is on the low end of its range and it has high volatility. I know at the same time, SPY has low volatility and is on the high end of its range, but I want to be able to sell a strangle. I don't think it's a good idea to sell a strangle. We don't really want to sell options if we don't have to in periods of low volatility, right? But I want to sell kind of a strangle here, right? I want to get a strangle on. So what I could do is pretty simple. SPY is at the high end of its range, right? So I'm going to go ahead and I'm going to sell a call in SPY, right? I'm going to sell this 252 call. That's a 16 delta call, right? Then I don't want to sell puts in SPY. I'll sell a put in something that has high volatility, is on the low end of its range. We'll call that Disney for now. So I'm going to go over to Disney and I'm going to go over and I'm going to sell a put in Disney, right? So in Disney, I'm going to go to that same expiration cycle. Let me get rid of this here. Let me shrink this here really quick. Cool. I'm going to go that same expiration cycle, and I'm going to look to, let's say, sell a put here, right? And then I'm going to go back to SPY and see what that looks like, right? So this is kind of interesting. So right now, selling the call in SPY gives us a negative 15.89 deltas, where selling the put gives us 11.71 deltas. Together, that's about negative 4 SPY deltas. That's totally reasonable and acceptable for selling a strangle, as an example. Right, but here it's interesting because I've legged it on two sides. This is a great strategy. A short call is a great strategy in SPY on the high end of its range, but it's not a great strategy to sell the other side of the strangle, like selling a put, if it's on a high end of its range and volatility is low. If volatility goes higher, that short put is going to be underwater pretty quickly. But we want to do the other side, a short put in a stock, again, that's on the low end of its range and has high implied volatility. That would be Disney. We have a volatility over its average as well as being on the low end of its range. So this is a great example of how beta weighting can show you what your SPY equivalent is for executing the strategy. So now I have a short strangle where I'm selling the call in SPY, I'm selling the put in Disney. Both of those strategies are the right strategies for those individual stocks. Again, SPY is at the high end of its range. That's a good time, and volatility is low. That's a good time to sell a short call, but it's not a good time to sell a short put. So I want to go ahead and see in Disney. I want to go ahead in Disney and sell the put. Now in Disney, if you remember, that put was not the 16 delta put. That put was, that put was not the 16 delta put. That put was the 21 delta put, right? So normally we wouldn't have sold that put. We probably would have sold a 90 put. However, because we're beta weighting this put all together, we know that this is a more neutral strategy. So we can get closer to the money and collect more premium for executing this strategy, right? So that's where beta comes in, right? And let's say we want to get a little bit long Facebook, and we want to sell a little bit of Amazon, right? As an example, we want to sell a little bit of Amazon. Let's say we're going to sell this, right? And we want to get long a little bit of Netflix, right? We want to get long some Netflix. So let's sell this put in Netflix. And we'll go back to SPY and see what that looks like, right? So that looks like we're long about one share of SPY. So together, selling a call in Amazon, selling a put in Disney, selling a put in Facebook, selling a put in Netflix, and selling a call in SPY is a very neutral strategy, right? So it's a delta neutral strategy where we're selling premium and collecting theta decay every single day. This is really, really cool. So, so what if we wanted to do a trade what if we wanted to do something like a covered call for example, in SPY via getting long, let's say, Disney as an example, right? So what we could do is, because remember, Disney is on the low end of its range, we're going to have a bullish directional bias. So we're going to go ahead and we're going to, let's say, sell the 295.5 put in Disney. We go over to SPY, and that is about 11 deltas of SPY, so like 11 shares. Now, if you remember, if we want to do something like an options only covered call, what we could do is, what we do for an options only covered call is we like to buy the call that has an 80 delta, right? So what we'd have to do is we could sell 7 of these Disney puts and then go over to SPY and go over to SPY and then sell that 30 delta call to create a options only covered call via selling puts in Disney that we have a very directional, high directional bias. We have high implied volatility. We have a sell-off when we want to buy into weakness. And at the same time, it wouldn't be a great scenario in SPY to get long those shares. We can sell that call as a covered call, but it's even better to get long Disney because Disney, again, is in the low end of its range and implied volatility is greater than its average, right? So this is really where beta comes into play. And then, so that's for specific positions. And then what we have is for, total portfolio. So let's say in SPY, we're long this call, we're short this call, we're short this call. So now we're down 90 deltas. But let's say you don't really ever want more than 50 short deltas. And one of the stocks you want to get long, let's go to our stuff here. One of the stocks you want to get long, let's say, VZ, where's that at? Is Verizon as an example, right? So let's say, so what we do is we are short 90 deltas and we never want to be short more than 50 deltas as an example. Let's say that's the rule of thumb. We want to figure out how to get long 40 deltas via Verizon, right? So now I look at Verizon, I see high implied volatility, low price. I could sell a put, do a double long, etc., etc. So I'm going to go ahead and in Verizon and do a double long strategy because I know a double long strategy is more profitable over the long run than just selling a put outright. So I'm going to go to the monthly expiration cycle, closest to 50 days. I'm going to buy the first in the money call. I'm going to sell the first out of the money call. We're going to pay 46 cents. I'm going to go down to the first option that allows me to do that for a credit. I'm going to go ahead, I'm going to sell the 44 put, right? That's a 12-cent credit. I go back to SPY, right? Because remember, we beta weighted the entire portfolio. Now we are short 86 deltas. So I can go ahead and do this. I can go ahead and do this. Hold on, no. Sorry. I can go ahead and, no, we want to sell this and I did that wrong. So again, we are short 90 shares or 90 deltas of SPY, but I want to go ahead and get long something to reduce my deltas to negative 50 that isn't SPY because it's not the best time to get long SPY, as you guys can see. So I'm going to go with something like Verizon. High implied volatility, low end of the range, right? Instead of just selling a put in Verizon, I like to go ahead and buy a double long or sell a double long because I know that's more profitable, right? So to do that, go to the option cycle, closes to 50 days from expiring, buy the first in the money call, sell the first out of the money call, go ahead and sell a put that allows us to do this for a credit. We see that is the actual trade itself, bang, bang. And then what we're going to do is we're going to go back over to SPY. And again, the entire portfolio is beta weighted. Right now, that gives us together about 4.5 deltas. So let's say we're going to do 10, 10, and 10, right? So now it's 45. So now actually we could probably do 9. So now we're going to do 9 double longs, and that will get us short 50 deltas, right? That will give us short 50 deltas, right? SPY is at the high end of its range, so it makes sense to sell calls, but it doesn't make sense to sell puts, right? So if we want to reduce our delta count in SPY, we can do it in Verizon. One of the ways we can do it in Verizon is by actually selling these double longs. And again, the reason we don't want to get long anything in SPY to reduce our delta is because it's low implied volatility. It's in the high end of its range. We don't want to sell puts when it's at the higher end of its range and low volatility. So we can go something like Verizon. Again, we saw that in our watch list is something that had high volatility and is at the low end of its range. We can go ahead and get long that and beta weight that position to do it the right amount of times where we get those 40 positive deltas. So remember, we were short 90 deltas from selling a 250 call, 248 call, and a 251 call in SPY. But we don't want to ever get long. This is completely made up. But let's say we never want to be short more than 50 deltas, right? So we can get long. We can get those 50 deltas from other means. The way we want to do that is by getting long Verizon. We're going to go ahead and sell. We're going to go ahead and sell because we're collecting a credit here. We're going to go ahead and sell 9 double longs in Verizon that get us that positive 40 deltas. So we are short 50 deltas of SPY, and we're doing it via being short SPY, and it's the right time to be short SPY, and hedging that and getting our 40 positive deltas by being long the equivalent of 40 deltas of Verizon. So that's what beta weighting is. It's really, really powerful stuff. We'll have a lot more videos on it, but this is just a great example of where beta weighting can come into play. I'll see you guys in the next video.